Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, what I believe certainly will be an action-packed video. I guess I'm a little bit biased here, but some fascinating things happening in the gold and silver world. And especially, I'd like to personally address the question of why is the COMEX getting its gold from the Perth Mint on Australia? So, with that said, let us dig in. Here you have Bloomberg reporting Australia's largest gold refinery has ramped up production of 1 kilogram bars to ease the supply squeeze in the US. And Richard Hayes, chief executive officer of the Perth Mint, says here, we're producing as many kilobars as we can. We're probably churning out 7.5 tons of them a week at the moment. And we are forward sold well into May. Then he tacks on a very large portion of those kilobars are ending up as COMEX deliveries, which certainly I find interesting. Maybe I'll be a little bit of a smartass and say, if this is legitimate exchange, why do they need to go to Australia to meet the delivery demands? And certainly we're going to dig more into that today in this action-packed video. On one hand, yeah, I understand the world has changed because of Corona and there are things that are still shut down. But why not have an exchange where the metal is actually there? If somebody wants delivery, you don't have to go to Australia or China or anywhere else. The receipt, the claim, whatever people have, the contract, the metal is stored there so that you don't have these things. So aside from whether the whole thing is a criminal, fraudulent operation, I mean, just from if you were running a legitimate business, for example, Andrew McGuire's Kinesis, hoping to have Andrew on. I'm in contact with him. The guy's got a lot going on, so it takes a little while. I know some of you have just heard his interview in the Big Silver Short book. So anyway, we'll try and get him back on and actually ask him about Kinesis, where my understanding is when it's created, the metal is put in there. Similar to if you're familiar with Vault Chain, which Rick Rule is involved with, a bunch of the mining companies, Andy Schectman and Miles Franklin involved, Royal Canadian Mint, actually warehouses the metal where things are audited so that in their system from your phone. Rick Rule actually mentioned that he bought metal, sold metal, then bought it again and had it delivered all from his phone, which, given the technology we have, I mean, it's great to have a system like that. Why can't the COMEX do that? Yet, I mean, just from a basic business model standpoint, it seems inefficient, let alone all the leverage you've tacked on. And now here you have a situation where to meet deliveries, they have to go to Australia. Also interesting, if you happen to catch last week's interview with Andy Schectman, he mentioned that while the U.S. Mint, Canadian mints have been on and off again, that the majority of his product has been coming from the Perth Mint. So hopefully the Perth Mint stays able to continue producing. It looks like they're falling behind already. Seems somewhat of a risk if that's supplying the whole world. And here we see arbitrage issues around the COMEX will be short-lived, and I don't see them lasting for months and months. This is an unusual situation where you've got plenty of metal. It's just in the wrong form and in the wrong place. Well, I guess we're going to find out. And I'm not claiming to know the answer for sure, but I mean, I guess we'll find out on that one, although more coming on that before this video is done. Interesting here, you see Alex Mooney has been raising questions about the CFTC. Certainly, if you're familiar with GATA, Chris Powell and Bill Murphy, they mention him often. Fortunately, at least someone out there in Congress asking about some of these same things. As you know, there have been significant stresses and delivery difficulties unfolding in the CFTC regulated gold market, excuse me. Um, I mean, again, isn't all this stuff what the CFTC is supposed to be catching? Here it is unfolding. And, but hey, I guess it gives me something to do. Anyway, so that's going on. Was interesting because Jeff Christian of the CPM group, some of you are familiar with, um, he had this presentation about what's going on precious metals markets and nonsense about decoupling. I actually sat through this one. I'm not a particularly big fan. I would like to keep this respectful here. Although I didn't agree with a lot of what he was saying because, yes, I get there's the wholesale market and the retail market. Seems like issues with both at the moment. And just the fact that you have dealers that are willing to pay over spot for metal on some level, you know, the price has decoupled. If you actually want to go out and buy silver, even if a dealer says I need more inventory, they're paying over spot. So, you know, I don't think anybody knows for sure how this plays out, but I continue to wonder. I mean, again, we've seen it. We just saw it's filtering over to the COMEX. The COMEX is getting metal from the same place that retail is getting metal from. So to say they're completely unconnected, I don't think is accurate. And actually, let's see if we can stop this share and then screen share what I would ask Jeff Christian if I were talking to him. Is that here you have, again, gold bars are flying 11,000 miles to New York to ease the ease supply squeeze. Again, digging a little bit more into the Perth Mint here, but arbitrage issues around. Okay, so that's the same quote. I guess this was actually the article they were talking about there. Yet here is another Bloomberg link. Gold buyers are forking over lofty $135 premiums for U.S. coins. So, I mean, people are out there paying it. These aren't imaginary bids. Again, even the dealers are paying it. So I know a lot of people have suggested that the dealers are out there gouging people, which I agree is a legitimate thing to wonder. And if you had a situation where dealers were saying, you know, premiums are $10 over and we're, you know, $1 under on the buyback, then I would be more in agreement, although that is not the case. So on some level, it's decoupling, and we will leave that one at that. But another data point here, Craig Hemke talking about how crude oil went negative and wondering, gee, well, if you have that happen, could the opposite happen in gold? Where could you have a case where there may be no sellers? A few bullets here. Thus, we are seeing a growing demand to hold contracts, COMEX contracts into delivery. For the month of April, total deliveries on COMEX exceeded 3 million ounces. This is more than 3 times the usual demand for a delivery month. An extreme shortage develops, or if any sort of run on the bullion bank fractional reserve system begins, demand for delivery through the COMEX and LBA may will soar. Demand for the front month contract will surge. However, to buy a contract, you will also need a seller, and in this case, there may be no sellers. So the potential result, the exact opposite of what you witnessed Monday in NYMEX crude oil. So again, to be clear, I don't think this can guarantee that in the next delivery we're going to see that, but certainly just in terms of what I've been tracking for the last decade, the signs towards that sort of ultimate outcome are building. And again, when you have the whole world now kind of counting on the Perth Mint. Um, so far, from all the folks that I've talked to, certainly my conversations with Andy, and now handling some of the orders that have come through the show. I mean, it seems like there's still a lot of people out there buying, and so there's that competing with the COMEX. And again, maybe something to think about. I just think of the physical bullion dealer market as the market, where with the COMEX, I mean, it unless you can actually take delivery. So I understand people are wondering, well, if I buy now, what if the premiums come down? But I think a different way of thinking about it is just, I'm not saying you need to or should do this. I'm just saying what I do is think about, all right, well, if dealers are offering, maybe a $20 to $22 bid or a $25 offer, to me, that's the market. Maybe, so silver's at $23 or $24, not what the COMEX says, until, we can see whether someone arbitrages that, or we see, or at least to me, until I can see any sort of indication that people can actually get silver. I mean, you have people paying well over that. And anyway, so will be a hoot, especially because now Bank of America even talking about gold surging past 3,000. Perhaps the other factor to add on there, maybe I would think, all right, well, yeah, those. I mean, the premiums are high. There's no question about that. Yet, again, this is in the face of, as we'll get into shortly, the Fed just going insane, buying and printing everything. I continue to wonder how much they're actually printing. I'm guessing we only get. I mean, it is interesting when you think about whatever the Fed's doing. I mean, we get this tidbit on the Wall Street Journal that, I mean, certainly if you've seen that movie Vice about Dick Cheney and how things were running in the White House, which I know it was a movie, although I did read his autobiography a couple of years ago, and certainly matched that. So I imagine the same kind of politics would exist in the bank, in the Fed, or any bank. Um, so just makes you wonder, all right, they feed a couple scraps to the mainstream media, but we really have no idea what they're really doing. And again, check out G. Edward Griffin's Creature from Jekyll Island for more info on that. And again, now we even have mainstream banks. Bloomberg says Bank of America raised its target to 3,000 an ounce. And I would suggest that if you had suggested $3,000 an ounce, even prior to the rally in the metals that began last May, people would have looked at you like you were nuts. And now here's Bank of America. And why? I mean, for the obvious reasons. The Fed is just pretty much going insane. Let's look at a couple Fed highlights here. I'm skipping out of order, but, we'll just do that anyway. Fed to disclose loan amounts, borrowers on business lending program. I mean, just look at some of these: 600 billion, 500 billion, 250 billion, 500 billion, 2.3 trillion. And well, I'll put it this way: I will bet I'm bidding an ounce of silver on a bet that I could document that whatever numbers we look at that they are telling us, I'll bet the ounce of silver. So they don't have to bet 10,000 ounces of silver today. Although actually I'd probably be comfortable doing that, because I'm sure that you can, with minimal research effort, you could find a whole chunk of other stuff that is well in excess of whatever the Fed has disclosed here. And even if not, Fed to extend loans to more cities, counties, The Fed said Monday it would broaden the number of local governments from which it will buy debt through a forthcoming lending program. So, Fed will lend up to 500 billion there. And again, when you have that open checkbook concept, it doesn't matter what the numbers are because they're not resolving the things. Here's 484 billion. And again, this was coming, these types of printing, whether it was Corona or just the debt ceiling or, some other black swan. This isn't because of, Corona was the spark in this case, but to be clear, that's at least my view on that. Quick look at the ETF holdings. Here we see the silver ETFs, primarily SLV. I look at these bars on the bottom. That's the weekly inflows. You can see still positive last week. Slowed down a bit from the prior couple weeks. And we'll see how that looks going forward. I'll keep tracking those for you each week, though. I get these from Gold Charts or Us. Nick Laird's site, who's actually over in Australia, and he doesn't do too many interviews. Otherwise, I'd love to chat. Although I'll email him and see what he's hearing about the Perth Mint. And here you see the gold holdings. Again, significant chunk when you look historically there in gold. Not quite as big as this was really a big one a couple of weeks ago. But metal's still coming in. A note here on marketsanity.com. If you Google Ted Butler, gold and silver suppression, upside imminent, he did an interview on Crush the Street, which I'm going to stop talking shortly because I'm darn excited to listen to that one myself. But just wanted to pass that along in case you'd like to check it out. I'm a big Ted Butler fan. He was one of the chapters in the book. On my list to email. He's been on the show before. Would love to check back in with him and see what he's seeing. Although until we get a chance to do that, we fortunately crushthestreet.com already captured that. So lastly, an article here from Lori Williams. World's top 20 silver producers, countries, and companies. Great link if you are into silver, which if you're watching this video, I'm guessing on some level you are. Has some nice commentary here, but also just a look at the top silver producing nations. These numbers are in millions. As you can see, Mexico, Peru, China, Australia. US a bit down the list there. And then again here, top silver producing companies, Fresnillo, KGHM, Glencore, Pan American, Polymetal. There is First Majestic. And in any case, if you wanted a good overview of where all this silver is coming from and what companies are producing it, there you go, Lori Williams, world top 20 silver producers. So lastly, with all that said, just a note that the Big Silver Short, my book about the silver market and all these issues that I dig into on the show, audio version is available out there now. Link is in the description below right there. Fortunately, it's been nice to get some feedback from some people who have already been listening and seems like they are enjoying it. So by all means, if you've actually been listening and finished it already, leave a comment below. Love to continue hearing what you're finding useful, but so far a great reaction. And if you'd like more information, again, you can click on that link, and I think you'll dig it if you're watching all this stuff. So with that said, we are going to wrap up for today, but we'll be back tomorrow with more insight into the gold and silver markets. And if you're wondering more about what's going on in silver, then here you go.